Welcome to the Weekly Spark, your fast 5-minute flash of insight into the world of mortgage and real estate. Every week, we're here to ignite your understanding of the market, from mortgage rates and housing trends to legislative updates and insider strategies. So let's strike the match and spark your week. This is the Weekly Spark. Welcome to the Weekly Spark and happy holidays. As you can see, I'm in a joyous mood while we get the Weekly Spark ready. Ryan is out today. He's actually expecting a new baby in the next couple of days, so he's taking care of his family. We wish him the best and can't wait to meet Bernie in a few days. So I'm excited to see that. So today, guys, I wanted to go over some key numbers in the market up through November, because I think that's really going to be a good indicator of what we're going to see going into 2026 in terms of rates, in terms of rate reductions, and what's going on with the Fed. We're also going to go over some home sales numbers for our realtor friends and really pick apart inflation, the jobs report, and home sales. So I'm going to share my screen, and we're first going to go over the headline Consumer Price Index. And the inflation data showed that consumer prices rose just 0.2% from September to November and 2.7% year over year, which is down 3% in the prior report. And then at the bottom, you can see the core inflation year over year, and that just basically excludes food and energy, also increased 0.2% over the 2-month period. And it eased from 3% to 2.6% annually. So this, guys, marks the lowest level since early 2021. And all of these readings came in well below analysts' expectations. This is great news. Bottom line, although the report was missing a lot of standard data points because of the government shutdown, the softer than expected results were very encouraging that inflationary pressures continue to ease. So this is great for consumers and great for prices going forward. So the BLS jobs report is the next thing I wanted to show you. And we don't really love that monthly unemployment rate. If you could see on the screen, we see this huge hockey stick. And, October payrolls fell by 105,000, while the November reading rebounded with 64,000 jobs added. That was above the 45,000 forecast. But downward revisions to August and September reduced payrolls by 33,000 jobs combined. So we don't love these numbers here. The bottom line here is the Fed is really just going to continue to weigh inflation risks against the weakening labor markets. So high inflation typically limits rate cuts, right? While soft employment data increases pressures to ease. The Fed has cut the benchmark Fed funds rate already by 3 times, 25 basis points, 3 times this fall. And that's encouraging going into the new year. And we will see if the Fed will continue to move in that reduction rate sentiment. All right, so the last graph I wanted to share with everyone is the existing home sales from our real estate agents. We can see what has occurred up through November of 2025. And as we can see, existing home sales rose 0.5% in November, and that marks the 3rd straight month of gains, which is very, very encouraging. And that's according to the National Association of Realtors. But still, sales remained 1% below last year's pace, and inventory declined, as you can see on the bottom here, nearly 6% from October to 1.43 million homes, but it was still 7.5% higher than a year ago. Bottom line is the NAR chief basically said, hey, listen, lower rates this fall supported sales, but we have these seasonal factors and they've slowed new listings, and that's moderating the inventory growth heading into the winter. But that's pretty typical at this time of year. So all this to say is what we're looking for is if inflation continues to stay tame and we have uncertainty in the job market and the overall economy, we do expect the Fed to continue to cut rates. Additionally, as you know, Fed Chair Jerome Powell is going to be leaving that position early next year. And the next Fed chair is going to be announced. We don't know exactly who that is yet, but this administration is certainly pushing for someone who wants to cut rates. They actually want to see cut rates by 100 basis points. What would that do for us in the mortgage and real estate industry? Well, it would certainly ramp up buyers. It would open up refinances for us, but more importantly, I think it would really help the real estate economy to continue to grow and move forward. So I personally think that we are going to see a tremendous 2026. I think we'll see a mini refi boom, and I think we'll have a lot of buyers with lower rates that can afford homes, and the affordability would increase. So we'll be continuing to watch that, guys, and we will be here next week. But I want to wish everybody out there happy holidays. And if you celebrate Christmas, have an amazing Christmas with friends and family, and we'll talk to you soon. Thanks. That's a wrap for this week's edition of the Weekly Spark, brought to you by Creative First Mortgage. If you've got questions or want us to cover something next week, please let us know, shoot us a message, and until then, keep your deals moving and keep your week lit. See you next time.